welcome to TheoTrade. This is Don Kaufman, July 8th, 2020, on a Wednesday afternoon, just a few minutes after the cash close. Hey, same range, different trading section. Nevertheless, the Nasdaq still appears to be on borrowed time. We're going to explore the range and obviously the trade inside of the Nasdaq quite in depth here momentarily. In fact, we're even going to look at a couple of trade opportunities coming in there. First and foremost, let's actually talk a little bit about the range. That's kind of a big statement. When I say same range, kind of different trading session, what I'm actually referencing here is the range inside of the S&P futures. What you're looking at is a 30-day, 1 hour. And once again, it really is the same range, different trading session. So immediately some people are like, well, we're coming out of a holiday, it's summer trade, push all of it aside. One thing that I want to point out with some of the trade that we're seeing right here, right now. If you trade options, get long gamma, people. We are in a tight range. We are wound up, okay? And we are ready to move. If you're unfamiliar with the terminology of getting long gamma, means you better be a net buyer of option premium. You can go out there, you can buy option premium, buy irons. Again, buying premium, even on an intraday basis, get long gamma. Net long gamma. That means, again, we're going to be buying premium here as, we're very likely to rip to the upside or break to the downside. And that's something I'm actually going to reference here momentarily. Net, what have the S&Ps actually done thus far on the week? And one of the ways I like to look at what the S&Ps have done for the week, of course, the Nasdaq, continues to kind of to rage to the upside. The only way to describe the Nasdaq right now is just utter rage. But the S&Ps, again, the S&Ps, we're expecting a decent size range this week. And by decent size, let's remind everybody here, if you're unfamiliar, again, with expected move, because we're going to cover it again in the Nasdaq here momentarily, but if you're unfamiliar with expected move, you want to know, what are these lines on the screen? Those what the option market depicts risk to be, okay, to the future. I mean, that's what options are. They're handicapping future risk. If you cruise over here on Thinkorswim into the Analyze tab, come over to Think Back, right? Back up a couple trading sessions, for example, to Sunday evening, because what you'll see, okay, Sunday evening is you can see expected move for the entire week. I'll just highlight this for a second. So on the week, we're expecting about an $80 move, $80 move higher or lower. Now, the reason I'm kind of just taking you through this exercise is I want you to see, have we moved $80? No, not even close to it. I mean, we started the week right here, down basically at 31.30. We were down there effectively today. We rallied back up a little bit, but it's been kind of a muted range. Why am I mentioning this? I'll tell you exactly why. Because now you can expect, let's get ready to rumble. Almost every single week, and especially recently, almost every single week, we tag the upside of the expected move or we tag the downside of the expected move. Just take a quick glance at the chart right here, right? Here, that one, we just missed it. Okay, this week we actually hit the expected move. Again, breach the expected move, breach the expected move, breach the expected move, breach the expected move. I mean, it goes on and on. So this week, why would you expect any different? From a probability point of view, we're very likely to tag the upper or lower level. Where are those levels? To the downside, we're looking at 3050. To the upside, just north of 3200. Specifically, you're looking at about 3212 in the SPX. All right. For right now, though, we've had 3 days effectively inside the exact same range. If we take a quick look at some of the sectors that really matter, we're also going to apply auto-expected moves. Now, in auto-expected moves here in the XLF, it's done what this week? It's actually slipping ever so slightly off of the Monday trade, but net we're slightly, very slightly higher inside of the financials, which again is surprising to see the S&Ps up as much as they are with the financials weak on a relative basis. So that leads us to what's driving the marketplace. Oh, that's pretty clear, right? Insanity is driving the marketplace, better known as the monsters of tech. That's it, people. We are down to a handful of stocks, and it has been a handful of stocks driving the entire marketplace. It's, the same old story, different day. That's why we call them the monsters of tech. It's Facebook, Apple, Microsoft, Google, Amazon. Now, push this aside for just a moment. we're actually going to look specifically at the QQQ because this is actually where I've done quite a bit of homework in terms of the expected move. And one of the things that I pointed out on Monday, again, on Monday evening, was the expected move. First and foremost, we had a pretty vicious breach of expected move last week. This week, okay, we're already outside the expected move. Now, 2 weeks in a row to breach the expected move to the upside, it is not unprecedented. Okay, the movement and the velocity of the movement, okay, that we've seen recently, this is the unprecedented part. Obviously, we've stabilized a little bit since Monday. Nevertheless, a continuation or breach, okay, continuation to the upside at this point, we believe that there'll be, again, a very drastic pullback inside of the QQQ. And that is nothing more than a little statistical analysis, again, of the velocity of the move to the upside. You know, when you start looking at the move, you can even scan, you know, what's the percentage move from the point of, literally like, last week to effectively now. And you're looking, 4, 5, 6% in an index product. Again, the velocity of those moves are phenomenal. And any time that we've actually had 2 major breaches of expected move to the upside, it's actually been met with some fairly severe sell side activity. One of those obviously coming, and again, I was kind of delineating this the other day on Monday. There's a breach, vicious pullback, actually pulling us to the downside of the expected move. You'd be hard pressed in any other point in recent history to find 2 consecutive breaches of expected move to the upside. I mean, for the most part, what's it telling us? Again, you can kind of break that down to the Nasdaq is on a little bit of borrowed time. There's literally froth, in the Nasdaq. So how might you want to trade that? I'll tell you what, I am looking, okay, at this and I'm thinking to myself, all right, so we should pull back, okay? But if it's going to be a much more, quote unquote, vicious pullback in the marketplace, I'm not going to use an in-out spread. I'm actually going to go about 16 days out. Okay, very, very short term. And I'm going to purchase an out of the money spread. And the reason I'm actually going to buy an out of the money spread, one of the things that's really apparent inside of the Nasdaq right now is quite a bit of volatility skew. And for those of you that speak geek, do you speak geek? Do you speak option geek? Right? I'm over here buying, and I'm buying about a 28 vol. Then I'm going to be turning around and selling almost a 32 half vol. And that differential over here doesn't sound like much, right? Oh, yeah, he's buying 28 and a half vol and he's selling 32 and a half vol. What's the difference between, 4 or 5 vol points? A huge amount, okay? And this particular spread for an out-of-the-money spread is trading, all right, relatively inexpensive given the fact that we're in a fairly volatile marketplace. So here is a $10 wide spread. Again, a $10 wide spread. Why am I looking at a $10 wide spread? It's trading right around $2. Well, that $10 wide spread, there's still a $13 expected move in the next 16 days. Now, I'm throwing a lot of numbers at you here, okay? Again, it's a lot of numbers. So if you think about this, there's about a $13 expected move, okay? QQQ is sitting right at 260. You just take away $10, you're all the way back down to what? 250-ish? That is well within the wheelhouse of this, okay? At least to be able to get your money back. In fact, if you look at this in a slightly different means, again, I'm buying, the 254, selling the 244. Go over and look at what's called probability of touching. You actually have almost a 37% chance of touching the short leg in this spread. Again, the skew is incredibly helpful right now inside of the QQQ, and buying the out-of-the-money spread, it's gold, Jerry, gold. Does it mean it's going to strike? Absolutely not. Okay, like any other trade that you put on over here, I'm actually taking a bit of an outside shot, but this outside shot I think is well warranted given the fact that the expected move has been breached. And that's the one thing that you have to understand about trade is I'm doing this on statistical analysis. There's no MACD over here, there's no Fibonacci. I'm sure, look, everything is overbought. If you want, I can even apply, a TheoTrade RSI Laguerre. Look, it's overbought. It was overbought for what? For months. It has been overbought for months. Nevertheless, the breach of the expected move, the velocity of this move is nothing less than spectacular. And we believe there's going to be a little bit of pullback in there. There's one other aspect that really is starting to resonate with me too. Okay. Obviously, the volatility has kind of found a floor. This leaves me very uneasy. I was kind of mentioning this the other day. The VIX doesn't seem to be able to crack right now much under 28. If you take a look at something like the VVIX is still north of what we term the VAMA zone, which is north of 110. All of your volatility products are what? They're still poised, looking for more risk. The other really bothersome part here is commodities are starting to break out. Gold, silver, right? So gold obviously is having a really meaningful breakout. In fact, you got to pull up a huge chart to see actually gold in this territory. Gold broke out again above the 1800 level. But if you haven't looked over at silver, it too is having a bit of a breakout of its own. Looks like it's going to have continuation, possibly to the 18, even 20 handle inside of silver. Now, the reason I bring that up is not to look at gold or silver autonomously. I all of a sudden have to question, so volatility won't back off. Okay, we're starting to break out to the upside in terms of some of the metals. What gives in this marketplace? I'll tell you what gives. There is a ton of risk. Listen, you don't have to sit there and believe that the marketplace is about to back off. I don't care, but I will tell you to go out there and to buy, okay, a relatively inexpensive QQQ put spread, a $10 wide put spread for the next 16 days might be a decent hedge for even the most bullish of you. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.